Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for the week ending Friday, September 13th, 2019. We had a mostly flat day, at least a SPY closed flat, down slightly, about 0.07%. QQQ down about 1/3%, 0.36. We had a little bit of gains that were faded earlier in the day. They faded those gains, and that was a technical breakdown. I posted this morning, and I believe I'd covered in yesterday's video, but certainly posted on the site. We had these smaller wedges here. I'm starting out, by the way, guys, with the ES futures. What we'll do is start out with the 60-minute charts, hit on the futures, move to the index ETFs, and then just quickly walk out the time frames. In other words, the charts are what I call stacked right now. Stacked means we have these trend lines that I'm watching on the 60-minute charts, divergences, things like that, that should these patterns, these 60-minute charts play out as I would expect, as the charts indicate, then that should trigger additional technical events, breakdowns, call it what you want, on the longer term time frames, the daily, weekly, and even monthly charts. So let's start here. So there's a smaller wedge, and so that was a day trade sell signal there. We broke down, and if you wanted to fade that, and we have the big trend line here. And as I said, I didn't expect it to break today, and probably won't even. Put pretty decent odds it probably won't break down, or the market probably won't do a whole lot next week until Wednesday. Remember, we have the FOMC announcement at Wednesday at 2 p.m. Eastern time, and the market tends to hang on that. Kind of go into a holding pattern usually before an FOMC meeting, but we'll see. You never know, and that's the thing. That's why I do these videos. You get the levels out in advance and be prepared. If the market starts to rally and break out the new highs before then, I would put the highest degree of confidence that the market wouldn't go too far. It would take anything short of an outright, and there's not going to be any outright trade agreement with the U.S. and China. So there's really nothing I could see to really rally the market. My message remains clear. My beliefs that the upside at this point is very limited in the markets, 1 to maybe 3%. Yesterday, as I mentioned, SPY briefly popped the previous highs, all-time highs, and failed to hold it. But we didn't have that in an S&P 500 nor QQQ. They're close, but they're not there yet. So here's the levels to watch. Let's keep it very simple. Again, ES, or the S&P 500 futures, we have this trend line here. So whether that breaks on Monday, whether anything that happens right before the FOMC meeting, even right after, I'm just going to tell you, the odds of whipsaw signals, whether it's a breakout to the new highs or a breakdown of this trend line, if it happens just before or shortly after the FOMC meeting, the chances of a whipsaw signal are increased. Doesn't mean it won't stick. I just wanted to point that out. You get that lot of what I call pre and post FOMC noise. So that's what to look forward to next week. We'll see what happens, but take a breakdown on face value. If it breaks down, technical breakdown. If we break out to new highs, as I said, it's not going to change anything anytime soon, not on the technicals, nor in my opinion, because we'll still have on the 60-minute charts, daily, weekly, monthly, everything all the way out, we'll have divergent highs, which again I've showed you repeatedly, a history of failures on breakouts that happen when we have divergent highs and overbought conditions. So that's it. Should we break that trend line, the next first support level comes in there around 29.85. And ultimately, I still think at minimum we come in and backtest the breakout of the August trading range right there. And you're talking a drop of where we closed today, about another right about 2, a little over 2.1%. And that's actually, we drifted down a little lower in the futures, so a little bit north of 2%. Futures drifted down after the close is what I meant to say. All right, next up, let's look at NQ. Same story. NQ, I had the minor uptrend line. This is the one I was highlighting earlier today and yesterday. There's our smaller wedge, broke down, and then as I said, I pointed out earlier today, we have pretty decent support, and that's where I expected. That's where I covered that short that I had there. Reversed it long, tried for a bounce. It went up a couple times, but I just basically didn't go anywhere, and I was shooting for a little bit higher upside, so I closed that one flat. That's right where I took it, right about there before. And again, that's because in front of the Fed, in front of the weekend, I didn't see a big breakdown coming in the markets, and that's why I reversed that to long. So let's show you now a trend line here to watch. That's the same trend line as we have on ES, or a comparable trend line right there. Well defined, a lot of reactions. We're not far below it or above it now. We have 78.83, also a pretty big support level in my opinion right there. And again, those are levels to watch next week. So if we rally up, all it's going to do is simply extend these divergences that are in place now. We don't have any. That was a minor sell signal. This is a sell signal we need to get us back down for another test to the top of the trading range at NQ, the August trading range, which is at 75.75. So yeah, like I said, next week, anybody's guess. Flip a coin. Probably my guess is probably a drift higher into before the FOMC meeting, and again, we've come so close to the previous highs on NQ, and I'm surprised they couldn't punch them out now. I don't know if that's a sign of weakness, been that close, and we just can't take out those previous highs yet, but we'll see. We haven't, nor have we been rejected off of them. Nothing's going to happen really until we break out of this wedge or work off all these divergences and everything else. All right, let's look at the index ETFs, and we'll wrap it up. We'll just go out from the 60-minute charts. Here's your comparable trend line on QQQ. See, the index, that's why I started with the futures. You just have a lot more levels, a lot more candlesticks on any time frame, especially that 60-minute time frame that you're looking at, because you see the round-the-clock trades, and you don't pick all those up on QQQ. But either way, there's your comparable trend line. There's the top of the August trading range, about 189.40. Again, I had the trend line on futures a little closer, so I'm going to move that one up. Yeah, it should look something like this to try to bring it in line with that NQ trend line, which I put a little higher weighting on. SPY, same thing. Here's your trend line off the lows. We essentially closed right on it, just like ES. I showed you just a hair above the trend line. This one's pretty well defined, so that's what you want to watch on the 60-minute chart. Trend line's coming off the late August lows right there. And there's our high. That was our previous high right there. Popped briefly. SPY couldn't hold it. But as I said yesterday, I don't consider that really a failed breakout attempt, because we really never broke out. IWM had a breakout recently, and that one could fail. I'll get to that in a second here. In fact, let's do that before I forget it. A lot of you guys trade IWM, and I do too at times. And RTY, the small cap futures, there it is. Very clean up trend line, same as SPY. So these charts are aligned right now. You have all these trend lines to watch, and if one index breaks, they're probably all going to go. And again, it's these same old things that in the past that indicated they would break before. Divergent high. Let's see, I don't have this chart all marked up. Was there a divergent high there? Maybe not. IWM, we had some divergent lows. I've had more long setups lately on IWM than I have on short setups for IWM. It's really the big caps that are starting to underperform right now. Small caps are outperforming. Something else I noticed in the market, a lot of junk stocks, lower quality, lower tier stocks, a lot of energy stocks, especially the service sector stocks and exploration production, those ones with pretty lousy fundamentals. That's what's been rallying. And again, a lot of small cap stocks, whereas the market leading FANG stocks, tech, and all that has been actually underperforming. That doesn't mean it's going down, it just means it's been going up less than a lot of the lower quality stuff. So kind of a red flag, if you will. All right, let's look at IWM Daily Chart and show you what I'm talking about. This is a trend line. So this is our downtrend line right here. We had a false breakout before, breakout here the other day. But as I mentioned, we have pretty big resistance even before we broke out. Big resistance at 159.41. Goes back quite a while. I'll color code that line so it stands out. And that's one to watch as well. And like I said, I pointed this out. We had the divergent low back here. We had positive divergence, and that's why I said a couple of weeks back and maintained that of all the indexes, if the market's going to new highs, this is the one that I like the best. And that's why I recently had a long trade on that one. But now I am short the small caps. And I'm short the small caps because they're coming up to resistance. I think this breakout will fail. I can also take that trend line and go like this. Come in here, still off the highs, catch that reaction, and we basically popped it intraday and closed on it. So you can put it any way you want, but again, it's a 60-minute chart tells me, look, this trend line goes, we're going to have a pullback in the small caps, and that's what I favor. All right, let's go back to the big caps. Let's go to QQQ. Let's look at this board here. Same old story. I've been talking about it for a long time, and we're still above it. This is that trend line off the lows on December 24th. We need to break this trend line. SPY already broke down. QQQ, which is contains all the, it's most heavily weighted, and SPY has the market leading stocks in it too. It just doesn't have such a concentration. So this is really a better glimpse at the market leaders. You know, Facebook, Apple, Amazon, Microsoft, Alphabet, Intel. They're all in here. They're all top components. So this needs to go. And again, to me, it's simply a matter of, do we pop, make a marginal new high, then break down, or do we break down because everyone's maybe expecting that high? Again, I've gone over that just recently, that all these new highs are marginal new highs, and then there's a pattern of sharp corrections each time when the market makes a marginal new high. So that's why, like I said, it's all about risk reward. So I see about being short about 2-3%, 1 to 3, maybe 4% downside risk versus as much as 20-30% or more. If again, this is why I'm walking out to the longer term time frames, show you all these trend lines and developments there, if they all break. So that's SPY. Like I said, SPY already broke down. We're back testing, and we're back testing also right at the previous high. So you have two resistance levels SPY is contending with right now. Previous reaction high, that's always a natural resistance level, all-time highs, and then we're there, and then the back test of the trend line off the lows on December 24th. We broke it here, and we back tested. So you know, if they pop it, it'd probably be a more bearish scenario to see it get popped and then fade, because that would be a bull trap. You'd clear out some more short interest if there's any shorts left right now, besides me, and then you'd suck in some longs on the breakout, and that would set the stage for an even swifter drop there. So that's what I'm looking at, and we need to break those 60-minute wedges to get that impulsive rejection off there. So that's why it all kind of ties in together. Let's look at we already did QQQ. Let's go out to a weekly chart here. So this is bigger picture. This is a bull market uptrend line, 2009, March of 2009. There's our bull market uptrend line. Bull market trend line broke back here in last October. Had a big correction, came in, we back tested it, and we've moved up. We're just diverging, like I said, from the 60-minute charts all the way out to these weekly charts. And we continue to build these divergences. Broke down, like I showed you on the daily chart a minute ago, above the or below the December 24th uptrend line. Back tested it there, and so you know, everything I see on this chart. Yeah, I don't like the fact that PPO is turning up now. I want to see that curl back down, and that's again why I can see the you know, easily see another couple percentage points up, and then you see these indicators turn back down. You'll have that divergence once again confirmed. Right now it's what I call potential because this is a momentum indicator, and on the weekly chart it's pointing up right now. Want to see that point down, puts in a lower low, and then of course I'd love to see, would really need to see some red candles here. Obviously some big red candles to nothing better than a bearish engulfing candle if we can get it in the next week or two here. Again, whether we go up or not in the near term. And then very near term, if you want to do this as well, here's that uptrend line we're really looking at on the 60-minute charts earlier. I could draw that little uptrend line, so kind of wedging up there as well. That's SPY. QQQ. QQQ, you can draw various trend lines off the lows. There's not any one that has the best fit. You really had a series of two trend lines. QQQ had its own little bear market back here in 2015. It dropped over 20%. And then part of that was due to a mini crash and a lot of the tech stocks and the ETFs right there. But either way, that was a over 20% drop. And then it kind of set up, it back tested, had another leg down. And then this is the big trend line, I think, the one that is probably the most important of all of them, is off the 2015 lows in QQQ, and most everything else up. It picks up in January of 2016, a lot of key stocks and sectors and indexes as well. And so that one, like SPY, broke down back in the fourth quarter. We back tested it, and we're just kind of rolling over now. We haven't we haven't broken this trend line, so we're kind of wedged between there. That's the whole point. This line and this line makes a wedge. We're wedging up. It's all about right now, I think, that December 24th uptrend line. Break below there. Of course, a break below the recent lows would probably seal the deal, put the nail in the coffin. That's that low right there. So that's what the bears need to see. Bulls want to see not just a breakout, but a sustained rally, and that just starts to take out these divergences if we can move high enough, and then it would be hard to make a case for a meaningful reversal. All right, finally, let's just go out to the longest term, the monthly charts, and this speaks just as clear to me. Here's a clean uptrend line right here. This is your bull market uptrend line on QQQ. I guess it shows a little better on the monthly chart. To me, it's like I said, that's very, very well defined. We had these stick saves right there. You can see we're cracking below at the end of the month, shot back up right here. So that's what I will be able to say, whether it happens next week, next month, or 2 years from now. When this trend line goes in that 20-month exponential moving average, that blue line there that just does a phenomenal job of defining bull and bear markets, when that goes on a monthly basis, that's when I think it'll be safe to say, we've entered a new bear market, and you can then, kind of tuck some shorts away where you're not actively swinging in and out of those. And here, back then, this was you'd have to take a parabola, a parabolic trend line right there to capture that, because that was a parabolic advance. That was a bubble in the NASDAQ with the .com stocks. And then from those parabolic advances usually come pretty sharp corrections. There was an 83% drop in QQQ. And here's your other bull market uptrend lines right there. And then, and of course the indicators, like I said, here's ROC 12, getting lower and lower and lower, diverging. These are big divergences building on the monthly, and that's again what tells me, we're headed down. When this breaks, like I said, if you're new to my analysis, this is where I think we're going at minimum. That'll be the first kind of, let's say, initial bear market target, where there'll be probably a lot of buying, a great opportunity to go long for a multi-month swing trade on the long side if and when we get there. But it's about 40% downside, and I still think that's coming over the next year or so. And then SPY, same story. SPY is about 30%. I measured it today from where we're at now to hit that comparable target, which are really the highs of 2015, 2016. And again, you can see it all in here. Divergent high, divergent high, divergent high. Same old stuff. Covered it many times in the past. So all we need now, we have the breakdown. We already had it, I should say, last quarter. As I talk about in technical analysis and trading, sometimes you get a breakdown of a trend and you just go from there. Sometimes you break down and you have a kickback rally or a back test of the trend line from below. So far, that's what we've had here, and the divergence has stayed intact. So this goes back into the 80s. And without exception, divergent high, bear market, 20% drop. Divergent high, bear market, 51% drop. Divergent high, breakdown, and it took a little while, a little kickback rally, and then we fell 57% bear market. Divergent high, 15%, and SPY, like I said, some other things had a bear market back then. SPY avoided the 20% drop. Here we actually already had a 20% drop. And so technically we met that measure. And but again, unlike these others, and that's what makes this one a little bit different. Back then, even in 2015, once we went off the top. I know a lot of people are comparing this to 2015. That was it. We didn't have any more divergence at that point. Here we had divergence. No, let me back up. Let me just say that yes, we dropped, but we had a a correction that lasted. We didn't get back above that level for about a year and a half. So from when we peaked, it took about a year and a half later. So that was an ongoing sideways, we call it a deer market, neither bull nor bear market. It was closer to bear market. And then we pushed up, and we would have had, if I would have extended the lines there, divergence, which was eventually burned through. So I just want to point that out. So we did have, technically speaking, it wasn't confirmed. I didn't get the additional, I like to see if you're going to have negative divergence, you come back up, you put a lower low in the indicators, come up, put another high, a lower high with a bearish crossover. We've never really had that. These lines just kind of cross back bullish right here. And so we're watching that right now. Look, we could make a bullish crossover on the PPO lines, and we probably would if we pop. Well, we'd have to do it on a monthly basis. They're pinching right now, so let's again. I think we'll know. We should have a really good idea, I would think, by the end of this month. If we're going to pop the new highs, the previous highs that I've showed you before, we've lasted a few weeks, you can see, before they failed. So that's what I would look at based on everything I'm seeing, these indicators and all that. Any new high, whether whether that was it in SPY that we already had yesterday or not, I would say, most likely by the end of this month. And then that will then tell us a lot what's going on here. Do we have any sell signals on these monthly charts, on the weekly charts? You're going to get them first on the weekly charts, of course, and you get them before that on the daily. And then you get your sell signals first on the 60-minute chart like this. And that's why, again, I started 60-minute, worked my way out. And just to say that if this plays out for this, on the 60-minute chart, that test back of the August trading range, then that brings us down to 249. Then that brings us out, and it looks like this right here. Imagine this is red instead of blue. You have a big red candle, and then that's also that takes you to 294. So what's it going to do on the weekly chart? Well, it's going to take us down out of here, and maybe give us a red candle. And if it's a bearish engulfing candle or any other type, there's many other type of candlestick reversal topping patterns that could then give us some more powerful sell signals on this more important weekly chart, which has longer term bearish implications. So first things first, let's see how next week plays out. And like I said, unless anything really big happens before Wednesday, probably a good first part of the week to take off, recharge your batteries if you're a swing trader, an active trader, and you just want a little break from the markets, because again, markets tend to go in a holding pattern in front of the Fed. So we'll pick it up next week, see how things go. This has been Randy Finney with Right Side of the Chart. Have a great weekend.